Welcome back, investors, to Ticker Time News. I'm Adam, and I hope your Friday the 13th was luckier than some. I hope so. But today, I want to talk about is the overly bearish ROBO put call ratio actually going to cause a rally? Now, I'm going to dig into that ratio and talk about it in further detail to try to understand what's happening in this market, because it's just going higher. We are at a very technical point right now on the charts that, man, it looks like it should not go any higher. It looked like today shouldn't have gone any higher, but the S&P was up 0.4%. The Qs were up 0.7%. The Dow was up 0.3%. And the IWM, the small caps, were up 0.7%. So what's happening? Have we become too bearish that we're causing a rally? And what was with the buyers that stepped in today to push the market higher? Was it because of this ratio? We're going to talk about it. We are also going to break down some other things about the market today. But remember, today's live stream and every live stream is for you. If you have a question, just type it into the live chat and we'll talk about it live on this show. So you are the most important person watching. Now, as I want to remind everybody, the bond and equity markets are closed on Monday. So no trading for any of us on Monday because we are celebrating Martin Luther King Jr. Day. That's right. That's happening on Monday. So there are no trading or investing happening. The market is closed. Now, you are very welcome. IFR Fun. I greatly appreciate you for being here. I love it. Absolutely love it. Now, there is a poll in the live chat, and it's basically asking whether you personally feel bullish, bearish, or you're unsure about the direction of the market. Where are we going over the next few weeks or maybe even few months, but in a shorter time frame? So if you could click your answer, bullish, bearish, or unsure, with that question there in the live chat. I greatly appreciate your feedback to see what you're thinking as well as we dive into this. DXY, which is the dollar, and VIX going lower, really low. Historically, markets sell off after these low VIX falls. I think you would be correct. Let me pull up the dollar here right quick. Actually, I already clicked the button. Let me go back to the SPX ticker for the S&P 500. I just want to show you where we're at right now, and then I'm going to dive into all of this that I have planned for today. But again, remember, your questions, your thoughts, that's most important. All right, I'm opening this up real big so you can see the past few trading sessions. Now, number one, the weekly expected move for the SPX is right here, or the S&P 500, okay? That was at 39.93. 39.93. You can see we closed 3 points above the weekly expected move. We also closed right on the down sloping trend line that has stopped every major rally in 2022, and currently it has stopped the first major rally of 2023. So can that line hold? It has been an extremely important trend line since the beginning of 2022. Actually, starting January 3rd of 2022 is when that trend line started. So for over a year now, whenever the market has gotten to that downsloping trend line, it's been rejected and kicked back down. Also, the third little bit here is the 200-day moving average, which is coming through just like this. We closed yesterday just slightly under it, okay? Today, it is sitting at 39.81. So we did close above the 200-day moving average. So we've got this confluence here of all of these different, what should be resistance for the market. The market is bumping its head right up against it, trying to pound its way right through that resistance. Can it do it? That's the big question that everybody is thinking right now. Unfortunately, though, the market's closed on Monday, so we're not going to find out until Tuesday where this is going to break. Now, we did connect with the 5-day moving average today. So we're connected. That circuit is complete and everything is functioning okay. We also opened up right on this red line right here, which if I go back, that was a main seat of chop back through this time period right here. That red line was kind of right in the middle of all of that chop. And that started mid or closer to the beginning, about November the 10th, going all the way until we broke down through that December the 15th. So for over 1 month, we were chopping around that line, but we opened right on it, sitting on it today. Okay, I know, a lot going on, right? Okay, let's go to the dollar right quick, and let's talk about this before I get into the market. Now, the dollar, it has broken through 2 very key levels. Number one, let's open this up a little bit so we can see it better. Number one, there is a trend line, okay, that has been support, major, yes, major indeed, that has been support here, that has supported the dollar since its big run starting back at the beginning, not quite January, of 2022. I think March timeframe is when the dollar kicked it into gear and started going higher, okay? This trend line, whenever the dollar has pulled back, has caught the dollar and sent it back up. But the dollar has broken through that. For 3 days in a row, the dollar sat as the low of the day for 3 sessions in a row there on this trend line before finally breaking down through it and closing below it. It also closed below my all-important number of 102.5. 102.5 was a very important number for me, that if the dollar broke it, I don't see the dollar coming back unless inflation kicks up and starts rising, or 2, if for some chaotic reason the government decides that it wants to print more money. Those are the only 2 reasons that I could see for why the dollar could break back up from here. And those are like black swan events. I think the dollar is done, at least for a while. Those 2 levels were very important, and the dollar broke down below that. Big, 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 big no. All right, for the dollar. Okay, let's keep this rolling. I'll pull up the VIX. Let me get, okay, there we go. Got it. All right, VIX for the VIX. Let's, oh, I'm sorry. Hold on. I got to pull that. Okay, I hit the wrong one. I went for number 1. I should have gone for number 2. I always go with CBOE as the data source on TradingView. Yes, Bitcoin has been ripping higher. It definitely has. All right, this expanding cone here, pattern for the VIX, it just continued that line today and dropped even more. Let me put this line there and see how long it can follow it. But we've got like this expanding opening cone, like this megaphone pattern here for the VIX, and it closed at 18.35. So yesterday it closed at 1883. So not down a whole bunch today, 2.5%, but it held in the 18s. We'll see if it can get a reversal around here. Now, like I mentioned yesterday, it did break its structure, okay? So it broke this prior low, local low, which is a recent time frame. This was back on December the 2nd. It broke that. So if the VIX continues to drop, that could be a sign that matches up with the ROBO put call ratio. Things are starting to line up in an odd way. I did not expect them. I know yesterday's video was titled "The Market Can't Go Higher," and I'm expecting a pullback, right? I'm still expecting a pullback in the short term. We are right up against all these resistances, and the market just can't push down the door after rallying for how many days now? I mean, it's just been incredible. Here's Bitcoin right quick before we I go into things. It is just moving fast. This is a face-ripping rally for Bitcoin. Now, I don't think it's going to go too much higher. 21,000, might be like a cutoff limit. What did it get to? It got to 21,321. That could potentially be the high. There's a lot of areas of resistance at that. If we just go back to the last time, Bitcoin was up this high, right back here. This was on November the 5th. Bitcoin got to 21,082. So the tip of this candle for today did break that, but it is still an area where I think, well, that could be the high. But anything's possible. We've got a whole 3-day weekend ahead of us where market participants, especially in the crypto world, could be thinking, oh, you know what? We got to get a part of this. And it could FOMO even higher over the weekend. That's a possibility. But I do think structurally on the chart, this is an interesting area, 21,000, for it to potentially like cool off there. And remember, with this last one, when we got up that high, it was a slow tick up, and then we had that rapid collapse right down to the downsloping trend line there. This time around, though, we're getting a short squeeze in Bitcoin, a short squeeze in Ethereum. They are up pretty darn big right now. Okay. What is Bitcoin's 4.7 right now? 4.8. Ethereum's up 6.7. So they're having big moves today. They're getting their time in the sun for the short squeeze that we've experienced in the market over the past week. The short squeeze even continued today. Now, can it continue any further? That's the billion-dollar question. I'm starting to think no, but wait till I get into the ROBO put call ratio stuff. You may change your mind if you're on that side of the fence that, hey, technically, this is it, right? 4,000 on the SPX. How can we get any further? Now, the stock market did open to some weakness this morning, and that's how we were able to connect with the 5-day moving average. And I think that was due to some profit taking because of that gap down. Some of the bigger guys in the market, including us, smaller retail, probably took some profits this morning, causing that drop down. Plus, I think we could probably pin some of the weakness on mixed earning results from several influential banks that are all featured, all of them featured increased provisions for credit losses. Remember yesterday I talked about, I wanted to know Bank of America, JP Morgan Chase, Wells Fargo, Citigroup, etc., etc. What are you doing with delinquencies? It was a big question of mine. So some of that did get answered. Let's see here. I want to make sure I'm getting all y'all's questions while we're going, but I do want to talk about the ROBO Put call ratio. Bitcoin taking off right now. Absolutely. CCL did very well today. Yeah, a lot of these small companies continued with that short squeeze today. Let's get you open, Carnival. Continued with that short squeeze today. Looking at the main indices, though, I'm not sure how much juice is left in the tank. The RSI here for Carnival is at a 78. 70 and above is overbought. Could that be a sign here that, wait a minute, we're cooling off. We're getting to the overextended area. And the market rolls in cycles, expansion, contraction. So we always have to be on the lookout for that. Baba also went high. Yep. Alibaba was one of the names on our top 10 momentum stocks list this week. As a matter of fact, it was our number 2 pick in our top 10 momentum stocks for the week. I believe it finished up 4.25% for the week, if I'm correct here with my math, 4.25% for the week. So that was a good call. Netflix was our number 1 call on our top 10 momentum stocks list this week, and Netflix was up 4.7% on the week. So both of those picks right out of the gate, over 4%, beat the SPY's 2.09% on the week. So some real good picks in that top 10. I only had 2 that were losers, ticker PDD and ticker MRK. Those are the only 2 out of our top 10 that underperformed. Everything else either performed with the SPY or overperformed like Netflix and Alibaba did. AMC is still a stalemate. Let's check that out real quick. AMC. And then I want to get into that ROBO Put call ratio. It's some fascinating stuff that we discovered. 0.8%. Yeah, it really had a day on Wednesday up 21%. That was it for AMC, right? That's all it could really muster. That 21% day. It was a big move for AMC, but I think there's other stocks that are more in the mainstream right now than AMC. I think AMC has gone to the back burner a little bit. So that's why it hasn't shot up like Carnival Cruise Line, for example. It definitely has shot up over the past several trading sessions. Now, buyers were quick to jump in on the opening weakness and controlled the price action for nearly the entire session today. And that is important to know. Okay, Amazon, the only big guy moving. All the others are sideways or falling top 5 stocks. All right, let's throw Amazon in here on the list, AMZN. We'll pull that up. Now, while the chart's loading here, just about everything reversed from the opening weakness and finished on an upbeat note. The S&P 500, which broke through technical resistance, like I mentioned at the very beginning, its 200-day moving average, which sits at 39.81 right now, closed 1 point shy of that all magical 4,000 level, which is an area it hasn't seen since mid-December. Now, resilience to the early selling efforts, along with strength in a few of the mega cap stocks like Amazon, up 3% today, helped to fuel today's turnaround. As an example, the Vanguard Mega Cap Growth ETF, tickers MGK, it had been down 0.9% at this morning's low before settling the session up 0.7%. So nearly a percent swing there for your mega cap growth stocks compared to the S&P 500 being up 0.4%. Now, Tesla is one that went against the grain today, and I do want to talk about Tesla real quick. Let me finish. Profit taking absolutely occurred today. Let's see here. It seems trading is only good at the morning. The rest of the day, it's slow and lame. Yeah, A lot. When you look at the 5-minute chart, 1 minute, 3 minute, whatever you're looking at to determine what's happening, a lot of action happens at the beginning of the day and at the end of the day. And a lot of times in the middle, it's neutral, right? It's either slowly climbing, slowly descending, or it's just chopping around in a range. We find that all the time with stocks. I love your take on things. Thank you so very much. I greatly appreciate it. Thank you for being here. Tilray did bad again today. Yeah, let's see here. TLRY for Tilray. I'll throw it up here on the screen here. We'll keep going down. Yeah, what was it? Down 3.65%. Yeah, it had its short squeeze. We saw a lot of smaller cap companies that have been squeezing higher start to run out of juice today. And that's what I talked about in yesterday's live stream. So it's not too surprising. Do you like AMC stock for trading? Nope. I don't even go near. Oh, my apologies. I didn't see the D. My apologies. The wire. My apologies. AMD. Yes. AMD and NVIDIA. Those are my top two day trading or swing trading opportunities that I look for in the semiconductor space. You can see AMD, it broke out of its longer term resistance here. It back tested with a really long wick, and then it just moved a little bit higher today, 0.3%, but it did close outside of the upper end of its weekly expected move. Now, if we look back to Monday, you know, this thing never got anywhere near the lower end of its weekly expected move this week. Everything was just pushing higher. And that's kind of like the story of this week. The market just pushed higher. It did whatever it could to make sure we were continuing to move up. Bernie Madoff rally. That's a good one. Let's see here. SPY moved with the limits as per yesterday calculation based on option data. Kudos to you. Maybe we need to talk about every day. That is a good point. That is a really good point. I think on the Monday, Tuesday, Wednesday, Thursday live streams, we can talk exactly about this. And for those that missed out yesterday, let me open up the SPY. I didn't take anything off the chart. I left it all here so we could see it. I also left it on the Qs so we could see it today. There was an expected $3.53 move in the market today. All right. Now, if we look at where we closed, bottom right corner of your screen, bring your eyes over here. You can see 398.5. That's where we closed, right? We moved $1.54 to the upside, which was a 0.4% move to the upside, right? If we calculate right quick from the, let me open this up real quick because I'm going to get down to the penny on this. Let me just real quick. I'm going to go from, I got to move the chart just a little bit. Give me a quick second. I want to get down to the penny on this. 393, right? 393.34. Let's see. And then 399.10. All right. 399.1. And then 393.34. The market moved $5.76 from trough to peak today, okay? Now, the dotted red lines were the plus or minus $3.53 move. If we add those two numbers together, and remember this one, I'm going to write it down so we don't forget, $5.70. That's how much the SPY moved from its absolute low to its absolute high today. And then if we take the expected move, again, plus or minus 353, and we add those two together, that gets us a total of $7.06. So the market, the SPY, could have moved $7.06 today from its top to bottom, or absolute bottom to absolute top, wick to wick, right? But the market actually stayed right within between those two lines, moving $5.76. So you see the dotted lines. This is where the lower end of the market expected things to go, and this is the upper end, where, and this formula is based off of options information, options data, implied volatility, a whole bunch of other data points go into coming up with the $3.53 plus or minus move for the SPY. And we can do this on all of the main indices, many of the different stocks. The higher the volume, the more accurate it will be. If we look at the QQQ and where the lines were placed yesterday, it closed perfectly within it. And this is perfect knowledge to know, so that when you're going into the next day, you know that the options market has basically priced in or put risk at plus or minus. And for today, for the QQQ, it was $3.12. And you can see that today's candle fit right nice and neat in between those two numbers, or in between those two dashed lines right there. So I think this is valuable information. It's information that I'm using on a daily basis. Let's include it in the Monday through Thursday live streams, right? We can do that. Absolutely. Friday, we're calculating the next week's expected move, and that's where we get the purple line here and the purple line down here. This was the weekly expected move. So by the close of business for today, the market should have closed between those two lines, and it is accurate 68% of the time. And I'll just put it right there. So it did close outside of the upper expected move. So this is another reason that says, hey, wait a minute. When it does that, it typically pulls back to it, okay? So have we reached the absolute top? Well, we'll find out what the options data has to say about that when I calculate that data. And I do it on about 40 different products, including the main indices, and it goes out to our private investor community every Sunday evening, so they have this information for the coming up week. Bitcoin surpasses Tesla in market value. Isn't that crazy? Wow. Oh my goodness. I don't want to miss any of your comments. Bitcoin weekly 200-day moving average is 25,000. If it could push that high, that would be incredible. Absolutely incredible. It's still coming back down right now. It's at 20,835 at this moment. So it's still coming down off that high that was made today. Microsoft didn't do so well today. MFST for Microsoft. No, what am I doing? What am I doing? MSFT. Why did I get those two backwards? Did I get it right? There we go. Microsoft. Microsoft up 1/3%, just like the market did today. And look at Microsoft. See, this market was so bullish this week that it closed outside of the weekly expected move. And remember, 68% of the time, the market's going to close between these two price points by the end of business on Friday. Microsoft broke out of it and went higher. And it broke above its 50-day moving average this morning at the open, but then, it sunk down a little bit further. And it's right there. My apologies. The 20-day moving average. And it's closed right now just below that 50-day. So I'm seeing a lot of reasons to think the market's going to pull back. And it's reached its high for the time being. I mean, Microsoft, 1, 2, 3, 4, 5, 6 green sessions in a row. 6. You know that typically doesn't happen. So I'm looking for a pullback on Tuesday. Plain and simple. It could push higher. There are resistance areas for Microsoft, like right up here is a big one where there was a lot of chop. Microsoft could go up there. What is that? Right around 240. $240 a share. I mean, literally, it's pennies away. So it's not that big of a deal to get there for Microsoft. The 50-day moving average is pennies away. So it's not out of the picture that things could go a little bit higher before pulling back. At least that's what I think right now. But I want to get into that ROBO put call ratio, but I can't miss your questions because you guys are awesome. Unsuccessful traders believe that the market is manipulated and use it as an excuse. Successful traders know the market is manipulated and learn how to play the game. Different mindsets. I can't agree more. You have to learn how the market moves, how the game is played in order to come close to even winning the game. It is a mindset and a choice. You have to make the choice that I need to study this. I need to understand how things work. And once you do, you'll be surprised at how easy, well, I shouldn't say easy. I should use a different word. How less difficult it becomes. So do the work, put in the time, and you can do it. I know you can. Just change that mindset, believe in what you're doing, and you can make it happen. I believe in you. And if you need help along the way, I'm right here. I will always be here. This live stream happens every day the market is open, Monday through Friday, whatever it is. Obviously, the market's closed on Monday. We won't be here on Monday. But, man, we'll be here together, and we'll work through it. Great question. Is Bitcoin ISO 200 or 20020 compliant? What asset does Bitcoin have to back its value? I do not know the compliance question. I do not have an answer for that. I can look it up this weekend and see if I can't figure it out. If somebody in the chat does have the answer, feel free to share it or post a link. You're always free to post a link. That's fine with me. I'll look this up and see if I can come to a conclusion on this or not. Okay, I'll look it up. As far as what backs its valuation, it is the people. The people and the blockchain, the technology. Those are the two things that provide value to Bitcoin. And unfortunately, that name we shall not mention, from that company we shall not mention, really messed it up. Really messed up the crypto space for a while to come. Now, Bitcoin is seeing its short squeeze right now. It's happening for Bitcoin right now. Like many other small cap names all week long have had their time for a short squeeze. Now Bitcoin is. And the short squeeze could continue through the weekend. Now, as far as the technology of blockchain and the people that support the adoption of Bitcoin, I'll take a live stream maybe this upcoming week, and we can dive into specifically Bitcoin, but I really want to get to that ROBO put call ratio because I think it's very important to understand what could happen on Tuesday. And I think that's important information to know. What short trades are you watching in 2023? Now that a lot of short squeezes have taken place, there's a bunch of names that you could hop into in short. But my comments about the ROBO put call ratio, I think will help to answer that question for you. So hold on just a moment, and I'll try to answer the short trades when I talk about the ROBO put call ratio. Dollar has nothing backing it either. That is a fair point. Absolutely. The one thing I would add is that the dollar is technically backed by the full faith and credit of the U.S. government, which are just fancy words, in my opinion, okay? I'm just adding that one little quotation to your statement because you're right. Nothing is backing it. You know, it used to be the gold standard. Now it's not. It's just paper money that can be printed out of thin air. There is this BRICS system that is potentially being set up as an alternative to the greenback, which will be based off of commodities. I don't know how that's going to play out in the future, mainly because it's our adversaries like China, Iran, Russia, you know, and several other countries in South America getting involved with this. So I don't know how that's all going to play out. Market is drawing in retail before the big dump. You've got a great point there, and I'm going to talk about that when I get to talk about the ROBO put call ratio. The monthly on the DXY, which is the dollar, printed its first red candle. Yeah, it broke through my 2 resistance lines, right? You had the uptrending trend line, it broke through, and the 102.5 that it broke through. And since that happened, I think the dollar could be done for a while. It could, unless we get something that happens in the market that is, you know, completely shattering. And we'll see. Let's see here. No, wait. Oh, I'm not going anywhere. I'm not going anywhere. Holidays screw me up. They can. They can. Just got here. No worries. I haven't even talked about the ROBO put call ratio, and I want to. I'm about to do it because I think I'm just about to the end of your questions. You said overly bearish. I only hear bulls now. Isn't that something? We're changing the way CPI is calculated again to make it look like inflation is, quote, not that bad, folks. Not that bad. Yeah, man, the CPI numbers, I know and I believe that they are not factual, right? But they're numbers that we have to talk about because it's the way the game is played. And understanding that can help you be more successful. Okay, I think I've gotten through all your questions. Keep them coming. Keep them coming. I'm not saying, you know, let's turn off the comments. Let's keep those comments coming. But let's change the topic to retail traders and the options market. Now, retail market participants, they have been showing aggressive bearishness in options transactions over recent weeks. Something that historically tends to be a bullish contrarian indicator. The data point that most perfectly captures this dynamic is called the ROBO put call ratio. The R ROBO stands for retail only buy to open put call ratio. And here it is on the screen in the blue line. The blue choppy line, that is the ROBO put call ratio. The black line going across the top, I should say, is the S&P 500. Now, this is a clearinghouse data point that reflects new options positions opened up by small market participants. High ratios mean a big skew towards puts. You rarely ever see large declines after those ratios spiked. The last two times this ratio was this high was near the bottom of the pandemic crash in March 2020. And you can see that here, this black line, and I've got it highlighted in red, but this line right here matches up with this peak right here. And then we can go back to the lows of the great financial crisis when December right here, oops, don't move for me. Hold on, hold on. I need to bring the, how did I just do that? How did I move this chart? Okay, how about this? Let's just start over. All right, hold on. There we go. Let's just do it like this, okay? All right, you can see my little guy waving his hand there, hopefully. All right, the March bottom 2020, all right? It spiked right here, and it almost perfectly matched that bottom. Go back to 08, December of 08, great financial crisis. We had it peak right here, and it didn't quite capture the bottom, but it was close. It was really close. And then we can go back one more time to 03, March 03, and we had it peak, and it peaked really high, like the highest in recent history. And that high point did not mark the bottom. It did mark a bottom, but not the bottom. And then once it spiked back up about where we are today, that was really close to the bottom. The reason I'm pointing this out is because if you look at how high the ratio is right now, and you look at where we are right now, you know, that doesn't really look like much of a pullback because of how quickly we ran up. If we would have just kept this line going, that'd be about where we are right now. But that's beside the point. Now, there are other times, right? Like right here, for example, back in 2016, it didn't mark the bottom, it marked a bottom. So could we be getting a reading now that doesn't mark the bottom, but it does mark a bottom? Now, it reflects all options activity across all expirations. When it gets very low, retail buying, all calls, and very few puts, the market is relatively more vulnerable. When it spikes, like it's doing now, we tend to be near an important low. Now, like all sentiment data points, it's not perfect, but it's generally useful and shouldn't be ignored when it's at extreme readings. Now, this comes after cash levels among large portfolio managers hit 6% last fall, its highest levels in a decade. And the put buying by large options market participants is also spiking to multi-year highs right now in 2023, according to the ROBO ratio. and that's LOBR. Now, people are consensus positioned for downside and pain right now. Perhaps they're right, and mega cap tech stocks implode on terrible earnings in the coming weeks. Overall, the market stalled at major and extremely obvious resistance yesterday, overnight in the futures, and again today, with the S&P 500 testing confluence at the 4,000 level in step with the widely watched 200-day moving average. Now, it was no surprise to see the S&P back off as big bank earnings prints started rolling out this morning. But the surprising thing was for the market to quickly retake that ground and go right back up to those big levels. Now, at the end of the day, earnings are going to tell the tale of this market. However, right now, positioning data makes this market a tough short. But what are your thoughts? Have you become so bearish, so overly pessimistic about this market that the market will actually turn and flip on its head and cause a rally? It's something for all of us to think about this weekend. Now, let's go back to your questions and some charts and talk about this. I'm going to close this up. I'm going to go back to here to the S&P, the 4,000 level. It is critically important. The 200-day moving average, it's at, right now, 39.81. We closed above it. We closed right on the down-sloping trend line that stopped every single major rally in 2022. That down-sloping trend line has been with us since January 3rd of 2022. I don't know. I don't think this market can go any higher. But I can't be overly confident about that when you see puts spiking at a time that, if we look at historical data, has meant we are seeing a bottom, but maybe not the bottom. All right, let's see what you guys think here. Okay. Hard to get out of some of the option spreads are so wide. They are. There are a lot. CPI is so high, I can't even buy eggs. Food inflation in the grocery store is not coming down. I don't care what report the government puts out. It's not. Energy prices are not coming down. I don't care what any government report says. We're paying the bills. We know how high energy is. We know how high food is. It's not what the CPI print says. I get it because, again, we pay the bills. It's tough. Damn, I'm closing my puts Tuesday. Premiums are, oh, go away notification. Premiums are so cheap right now. Yeah. When I pull up the options chain here, it just looks absolutely ridiculous. Hold on, I have to log in every time I open this thing back up, which I guess isn't a bad thing. Okay, there we go. We're in. Just hopping over to the SPY. Man, me oh my. All right. Let's see here. Next week. Wow. That's not very big at all. Let me look at the SPX here. Well, that's not too bad at all. All right, we're on the SPX. So I'm going to give you guys this one data point that I send out every Sunday evening. And it's the weekly expected move. So you can see that where my blue highlighter is, the weekly expected move for the SPX, which is the ticker for the S&P 500, we stopped and closed just above it, 3 points above it. We're probably a point above, not even a point, less than a point, a fraction of a point above that downsloping trend line that has stopped every major rally in 22 and now in 23. And we are a few points above the 200-day moving average. So we've got all that confluence right there, that convergence. And we're nearly right in between the anchored VWAPs for the high of 2022, which was January 3rd, and the low of 22, which was October the 13th. We're practically in the middle. We should get rejected from here. Options next week. Here's what it is for the SPX. I don't normally do this on Friday, but I'm gonna do it. I'm gonna do it today so you guys can see for Tuesday. All right. I just have to do a couple of quick calculations here. Just a couple. And then I'm gonna adjust these weekly expected moves for next week. Just give me a quick second. I'm putting next week's expected move. And remember, the market is closed on Monday. So it's a short trading week. All right. We only have 4 trading days next week. All right. All right. There's the upper expected move. Let's see. All right. Let's get the calculator out here. Let's do this equation. Okay. It's not too far off from where we are. 4032.48. That is next week's upper end of the weekly expected move. Now, if you notice, that takes us above the downsloping trend line that has been so important for this bear market. Now, on the downside, I have to adjust the lower weekly expected move, which is going to move higher. And by the time we get to Tuesday, this information may change by a few pennies because it's fluid. It's not static, okay? I just want to make sure that you understand that. Okay. 39.65.68. That's the lower end of the weekly expected move. Now, if you remember, the expected moves for this week, okay? Actually, I believe I can do this in TradingView. Let me do this right quick. I'm going to bring that line back down for just a second because I want to see something real quick. All right. Okay, let's see. Just real quick, I got to 3895.07. Okay. All right. All right. This is very important to know. The weekly expected move from last week was nearly a 100 point plus or minus 98.25. This upcoming week in its weekly expected move for the SPX, which is the S&P 500, has taken 2/3 of the volatility out of the market. So the expected move that the options market priced in for last week versus what the options market is now pricing in for this coming week this week that we're still in, Monday all the way to today, Friday, and what the options market is pricing in right now for next week, which again, we're missing a day, so it's only a 4-day trading week, but 2/3 of the volatility has been cut out of the market. And you can see now with the two purple lines here on the screen. Thank you very much. I greatly appreciate that. You are awesome. The two purple lines here, if you notice, the lower end of the weekly expected move is right above where the market opened up today, okay? But it is still below the downsloping trend line that has put a halt to everything for over a year, okay? So if I play this out, you know, we got Tuesday, Wednesday, Thursday, and then Friday. Friday's right here. The lower weekly expected move is down here for next week. The upper end is right here for next week. What if next week we do get that pullback in the put call ratio, the ROBO put call ratio, and it's overly bearish slant does cause the market to pull back? What if then we find support at this old level that was chopped all through here, and then we're going to find ourselves in a declining or descending triangle? Now, if we look at the chart patterns and we look for a descending triangle, it's a neutral position where the top is declining, right? And the bottom is flat. You can have breakups or breakdowns from that pattern. So what I'm thinking is, if this pattern holds and next week, you know, we stay above the lower end of the weekly expected move, we're either going to, for next week, here's my call. Expansion, right, leads to contraction, leads to expansion, leads to contraction, leads to expansion. What if that's the play? What if that's the play for where the market is headed? Something to think about this weekend. I'm going to mess around with the charts this weekend and give some real hard thought to the ROBO put call ratio that we talked about earlier, and all the technical indicators here on the chart and what's happening. I mean, the RSI is not even at a 70 yet. It could push higher. If you look, on the MACD, we actually had a crossover this week, and it's crossing up, which is typically your sign to, hey, it's going higher. So this is interesting. I've definitely got a lot to think about this weekend with this market, because we are up against a very, 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 very important level for this market. And it's either going to break this long-term resistance, again, that's been in place for over a year, or we're selling off. So again, a lot to think about over this holiday weekend. Okay, I saw a comment in here. I definitely want to get to everybody talking about Amazon. We pulled it up before, but let's talk about it a little more. As a matter of fact, again, I don't typically do this because I send it out to our private investor community every Sunday evening, the updated for the week ahead, the weekly expected moves, about 40 or so products. If you want some added, all you have to do is say add them, and we will. I got to do the equation. I got to do the equation again. Just give me a quick second while I'm doing the equation. I'm doing it for Amazon, so you know. And that way we can see here. Now, again, remember, this data is fluid, so it can change by the time I get it updated on Sunday to send out to our private investor community. But let's see. Amazon's at a pretty key level right here. Let me do this right quick, and I'm still getting the running the calculations here for Amazon. If we go back, this is what we have to do for a lot of stocks right now, especially your mega caps, your big names. We got to run things back to 2019, okay? If we're going to be honest with ourselves about where is this thing going, where is it heading, we've got to look back. Now, Amazon, it's pushed higher, is up 3% today. Now, this area right here, that top there, and that top there, that's just overhead, and there were a couple little bumps right there on the road. But if we go back, and then of course right there, and if we throw a horizontal line here, we're looking at about $100 a share right there for Amazon. And that lines right up with some support, and it lines right up with resistance, resistance, resistance. Now, it came down to this level right here, which lines up with prior areas of support. I've already got them marked here and highlighted. Now, there was, for Amazon, this zone right here. I'll make the box a little bit bigger than the actual zone so you can see it. But this zone right here is July 2018 until April of 2020. Amazon for 2 years moved sideways, right? And then if you want to, you can, you can nearly throw a box up here where Amazon just, chopped around and moved sideways. And this one up here is July 2020 to May 2022. So almost 2 years again that Amazon moved sideways. So if history for Amazon is doomed to repeat, then Amazon goes through an expansion move, and then it stays in a range for 2 years. It goes through an expansion move, stays in a range for 2 years, goes through another expansion move, just this time it's down instead of taking legs up. What if Amazon is now going to chop around for the next 2 years? What if? That would be the box right there. I'll leave it up there for a few days and see if, this thought experiment here for Amazon's movements holds true or not. But let's zoom in here for Amazon, because I did want to. I said I would, and I will. I'm going to put, as of right now, what the weekly expected moves are for Amazon next week. Now, these numbers are fluid, so by the time I get to my official numbers that I release every Sunday evening to our private investor community, it may be a little bit different, okay? So let's do the math on Amazon. It's not a very big move at all. It is not a very big move at all for Amazon next week. Okay, let's see. Where do we close at today? We closed at 98.12. Okay, let me just plug this in, and then we'll start winding down the show. We've been going for over an hour now. I see your question there about explaining something about investing. So if you do have let me just throw this up here right quick. Can you explain something to me? I'm new to investing. I can do my best to explain anything that you would like. Just let me know what it is about investing. And I can do that. And you are very welcome. Always, always. All right. So for Amazon next week, as of the data right now, and it won't be locked in and official until I run the numbers on Sunday evening when I publish them for our private investor community. It's a $3.92 move up or down. That's it. A $3.92 move up and down for Amazon for next week. And if we look at that 98.12 and we add in that 3.92, that takes us to 102. So if I adjust this, we're going to 102.04. It puts us just above that dotted red line, but funny enough, it keeps it right within wow, it keeps us, funny enough, right within that yellow box. All right, let's see on the lower end where we need to take this. And these are just preliminary numbers, so they do fluctuate, and I won't have the official number until the markets have completely settled and I do the equations for the 40 plus products that we do on Sunday evening. All right, 3.92, okay. So this lower one is going to go up to 94.2. So that's what it looks like for Amazon next week. Basically, the weekly expected move for Amazon is either we drop down to where Amazon opened this morning, which is at 94.2, and it opened up at 94.18 this morning. And we could go as high as 102.4. And funny enough, it keeps us within that yellow box. Is Amazon on its way to chop sideways for the next 2 years? That would be absolutely incredible. RSI for Amazon is in overbought territory at 71.7. It's outside of its local trading zone. The MACD has curled up above its trend line. So, you know, there are some bullish signs here. If we look at volume for today, volume was above average. It was more volume today than yesterday. But Wednesday really took the cake on volume, and that's when Amazon had the 5.8% move compared to the 3% move today. So here we go. We got it locked in here for Amazon for next week. Again, it's not an official number that we would put out like we do on Sunday evening. It may move a few pennies between now and Sunday evening when we do our official calculations for the weekly expected move. So that's Amazon for you. All right. Anything else you guys want to talk about, or you want to, you know, wrap things up? I know it's a Friday evening, so we typically don't go too long on Friday. I do hope our conversation, the information that I shared with you about the retail put call ratio was insightful. And is it going to hold this time, or are earnings going to cause an implosion with this sector or that, like maybe technology. Maybe technology implodes, causing the markets to then fall, which then would say, you know what? Retail was right. The overly bearish ROBO put call ratio was correct, and the markets come down. I mean, we are at very technical levels of resistance, multiples, okay? That's got to count for something. But again, we don't just take just one indicator or one data point to come up with our theories, our thoughts on the market. Bitcoin just hit 21. Oh, I must have missed it. It's at 20,970 right now. You are absolutely welcome. Absolutely. Makes no sense. I feel you there. Absolutely. And Bitcoin tagging 21,000. It is back up. I guess about half hour ago, it was down about 100 points. Now it's back up. It just hit 21,000 again for today. So it's going through its short squeeze right now. Same with Ethereum. Ethereum is outperforming Bitcoin, if you want to say. It's up 7.2%. Bitcoin is up 5.2% right now. So it is definitely, the volume is up significantly on these moves here for Bitcoin. So as long as it wants to continue to push higher, and it's got the volume and the momentum behind it, it can go. RSI is at a 94 right now. So it's definitely overbought on the daily chart for Bitcoin. But yeah, it's getting its short squeeze. Everybody else had their short squeeze all week long. Bitcoin's getting its short squeeze. The past, what is this, three sessions here, it's been pushing higher. So this is pretty cool. All right, ladies and gentlemen, I will wrap it up here. I gave you some time there to put some comments in. So we're good to go for tonight. Have a good holiday weekend. Remember, the market is closed, bonds and equities, on Monday for Martin Luther King Jr. Day. Obviously, crypto is open 24/7, so you can go try to snag some of the short squeeze happening there. But with that said, enjoy your weekend. I'll be back Tuesday after the market has closed to talk about what happened, why it happened, and what to expect going forward. And of course, to answer your questions, because you are the most important part of this live stream, and I enjoy your company every day. So with that said, again, have a wonderful weekend, and I'll see you in the next video. Good night.